Bitcoin is trading above 28,000, but will it face resistance at 30,000? Joining us now to discuss the crypto markets is Tom Shaughnessy, Delphi Digital co-founder. Welcome, Tom.
Hey, thanks so much for having me on.
Glad to see you. Okay, so 30,000, that seems to be, traders love those round numbers. Is that going to be our next resistance level?
Yeah, I'm not too sure on the trading, but I mean, the thing that has me pretty surprised is just Balaji's bet for $1 million in 90 days. Well, I guess it's down to 80 or 85 days now. I honestly don't think that's probably going to happen, but I think what's more interesting is how he kind of reached his idea that it should happen. I think that he probably studied a lot of, hyperinflation over the years and saw this as probably the best time for his call to action on alerting people that, the difference between central banks and decentralized currencies. So I think it's going to be interesting to watch that, but I don't think it's going to happen. But it is quite a scary thought if it does happen, I think, and it's both scary and good, I guess.
That makes Bitcoin worth like $21 bajillion at $1 million, and I mean that's kind of nuts, isn't it?
I think it's crazy because I mean I'm on both sides of this. It's crazy tech validation and sorry.
As in 90 days. You think when you say you're on both sides of it, you're not saying Bitcoin hits $1 million in 86 days.
No, I don't think so. But I do think it's on both sides. I mean, it's crazy tech validation for us, right? Like this is what we all wanted, right? We wanted, global eyes on crypto and validation. On the flip side, to think that global markets will blow up to a degree that drives $1 million Bitcoin is honestly scary as hell.
Do you think the current banking crisis we're seeing now with Credit Suisse, First Republic, all three crypto-friendly banks, is that a risk management issue, or is it a deeper crisis in the lending in the banking sector, like what we saw in 2008?
Yeah, no, that's a great question. Definitely not a 2008 expert, but the thing that I didn't like about all of the news and the media surrounding crypto and the regional banking crisis is how drawn in crypto got to it, when in reality it's anything but that, right? I mean, this is just classic, the Fed raising rates, banks taking their depositors' capital, investing that, having massive duration on that, and then as people look to exit, they have to sell those assets at a loss, and that's kind of the issue. So to see people, especially in the government, come out and say, this was crypto's fault. Well, surprise, it's not. It's your normal banking risk managers over-indexing to longer duration assets causing an issue. So that's kind of annoying to see, but I don't think we're anywhere near 2008 yet. At least I hope not.
So do you think that this... Do you think that this boost in Bitcoin we're seeing, is it sustainable? Is it because, people are like Balaji are just, cheering on this hyperinflation narrative, or, they're seeing this banking sector collapse and they're saying, this is going to be a larger issue down the line, or is it just a little too much enthusiasm right now and it's not sustainable?
Yeah, that's a great question. I wrestled that all week. I don't think that central banks or the US dollar is going anywhere. But I do think that this is the first time in history that we have a global banking crisis and we have crypto validated to a degree and well known enough that people can now kind of seek an alternative and go into crypto, right? In 2008, we didn't have that, but now we do.
Nonetheless, I mean, it's still relatively, the market cap of crypto is still smaller than a few companies on the S&P 500. Nonetheless, as well, are we looking at this and thinking that we're viewing the correlation as causation and not thinking about the exogenous variable, which is the Fed raising rates to deal with inflation? Therefore, two things happen. First of all, it raised rates, and that caused all sorts of chaos in the banking sector. And now the market views this and says, as I said in the intro of the show, that they it could be that, well, the Fed isn't necessarily going to raise rates. In a couple of days, they're going to hold back potentially, and the market is betting that way. Crypto markets are betting that way, and it's more of a risk-on play right now, which is how we got to 28,000. In other words, are we assigning too much of the macro chaos to the Bitcoin's rise and not the underlying issue of it's just it'll be easier to take risks in a couple of days than we thought?
I mean, there's a lot to play here. I mean, I think a lot of people look at a pausing of rate hikes as bullish, but the data suggests that once the Fed stops raising or pivots, that's generally historically when markets actually sell off, which is obviously not great for markets. But you're having those conversations of rate hikes pausing under the guise of massive inflationary pressures as the Fed basically backstops all treasuries at par, not only in the US, but around the world. The ability for governments to say, hey, you know what, if your T-bills are trading at lower than par, we're going to give you the difference basically. That's massive inflationary, even if they're not buying them outright like they did in the past. So I think it's less about the Fed pausing and more about liquidity and pressures or surpluses there.
Okay. Well, in a note published Monday morning, Goldman Sachs economist David Merkel is forecasting the Fed will not lift interest rates at this week's meeting due to banking system stress. Do you agree with that assessment?
I think I think it's way more likely that they don't raise to the degree that they were going to a week or two ago, right? So they said that they were going to raise, I think, 50 bips, and then over the course of the last 5 or 6 days, every day that those percentages have shifted, I think it's 60 or 70% chance of a 25 bip hike. So I think that's probably most likely, if not nothing.
All right. Tom, thanks for your insights. That was Tom
Thanks so much for having me.
Shaughnessy's Delphi Digital co-founder.